I have been trading for 3 years now, and over my trading journey, I've tried many strategies, and at each time making them even more complicated and difficult. I've been trading smart money concepts, 3 double-decker bus setup with the pony, giraffe, unicorn horn, triple reverse, double top head strategies. And although it sounds good on paper, and you can look really cool drawing, oh, here's my double top squiggly peppercorn unicorn area here, and if price ever touches the little thing down here, then I'm going to go for a double buy sell entry. But no, that is all wrong. What I have found over my 3 years of trading and how I make so much money at such a young age is you have to have a simple strategy, okay? None of this triple double top smart money concept, liquidity void, fair value gap. I've traded all of that. It's so much effort and it's not needed. It's not necessary. You can make the same amount of money by trading incredibly simple, just using pure price action and technical analysis. No 2 pip micro stop losses, 1 to 269 risk to reward ratios. You don't need any of that. That is excessive and you're overcomplicating the trading. This is an example of how simple your trading can be. All you need to do is start on the daily time frame. You pick a pair. Any pair, it doesn't matter, they all work the same way. I like GBP USD because I'm British. That is why I trade it, no other reason. No super high depth, the market makers, shadow people are manipulating this pair into my favour, and I've interrogated the deep dark depths of the trading fathers to manipulate this pair. No, I don't know any of that BS, okay? It's useless, it's wrong, and it won't help you. What will help you is basic technical analysis. Looking at this chart, where do you find the support or resistance levels? Why do we trade support and resistance levels? Because support and resistance levels are a very simple, easy way to trade. Price will go into profit 50% of the time, and it will go into loss other 50% of the time. You will win 50% of your trades, and you will lose 50% of the trades, because that's how probability works. Price comes down to a support level. You go for a buy position. You set your buy position here. Price can either go up into profit or price will go down into loss. You close at a win if it goes into profit and you close at a loss if it goes into a loss. But how you make this profitable is you just make your wins slightly bigger than your losses. And how do you do that? You keep your stop loss small and your take profits a little bit bigger than small. It is that simple. No triple, double, wagyu beef, fair value gap, liquidity order block, double, triple entries, 1 to 200 risk to reward ratios. You don't need any of that. You just need a way to manage risk, which is why you support and resistance, and you just need to manage risk effectively and make your winners a little bit bigger than your losses. So, pick a pair. I'll start on GBP USD and start from the daily time frame. All we're looking for here is a bias. Which way is the market gonna go this week? So we look at where price is now at this level here. What do we think is gonna happen? Well, let's start by looking left. All you need to do is identify a support level below price and a resistance level above price, okay? So let's do that. Where is our resistance level? Easy enough. Well, just looking at this time in this bit of the chart, we have a very clear resistance level here. Why? We've had rejections in this area, price came all the way up, big uptrend, and it shows this area here to bounce down. That is our resistance area. If price comes to there, we're going to sell. Also, if price goes to our support level, which we will find, we're going to use this resistance level as our take profit. Now, we found our resistance level, let's find our support level. Well, where do we see support? We see a resistance area here, and here. Resistance area was found here, and you see it shifted to form a support level. So we had a support level in this area, which turned to resistance here. Price then came back up to it, retested it as resistance, retested it as resistance, came back, broke and retested it as support. So this is our support area. Whereas price is at the support area, and deducting using the fantastical measures of price action, we can deduce that this wick here means we have retested off the support level. So our bias is going up because we just had our daily candle retest the support level. So our trade is simply going to be biased for a long position because that's what the daily tells us to do. So now we've encompassed a bias. Our bias is buys, which we will just simply put here. We are going to look for buys. And we put that in a big font for you guys so you can understand. Now, 4 hour. 4 hour, we're looking for a bit more detail into our bias. What do we see? We see more closely that our support level is good. It is good. And look, we see a bigger rejection, a hammer candle, and 2 long wicks. That is very good news. That means we're going to go up. Or we should go up. We don't know. This isn't financial advice. It is just my opinion. Nobody knows if it's going up. It could go down and I could look like an idiot. But from what I experienced over my time of trading, I think that price is going to go up. So, looking at the 4 hour, we know we're going up because of this hammer candle and these wicks. By looking at our bias, we can confirm that this bias is a good bias. So, now we're going to navigate to the 1 hour time frame. And here we're going to get our entry. We're going to enter and manage our trade using this time frame. And we are going to look for buys on this time frame. So, very simply, price is in our support area and we know we're looking for buys. We can enter a long position here. Where do we put our stop loss? We put our stop loss in an area where you think if price gets to, your trade is no longer valid. Now, usually with support and resistance, it's under the support level and above the resistance area. I feel that price could also potentially, this area here is also a support area. So I'm going to put my stop loss just under that level, just down here. Because I think if price does reverse against me and break past our support level, there's always this area here that price could get to and retest off of. So I'm simply going to put my stop loss under it. Yeah, it's a big stop loss. It's not your 2 pip hyper micro nano stop losses that are smaller than the spread, so you get stopped out before you even place the trade. You don't need any of that, okay? It's stupid. You're going to lose money. It is just the matter of managing risk. So now we know where our price is going to go to. Our stop loss is very simply where we think price, if it gets to this area, we don't want to be in the trade anymore. So, what is our take profit? Our take profit is an area where if we think price is going to get to it, we're going to close our trade. So where we think the best possible place for price to go to before it reverses against us. So where is this? It is our resistance level. Look, this area to our left, lots of resistance. If price got to there, you think, okay, let's go for sells. So if you're in a long position, you certainly want to be exiting at a place you want for sells. So we're targeting the resistance area. We have a stop loss and a take profit, a 1 to 2.5 risk reward ratio. There's 2 things that could happen. Price could go up into our take profit, or price could go down and stop us out. 50% chance. I don't know what's going to happen. I don't know, no idea. Price could stop me out and I could look like an idiot, or price could hit my take profit and I could be rich. It is this simple. So 50% of the time you'll win, and 50% of the time you'll lose. And the secret to making money from trading is you just make your take profit a little bit bigger than your stop loss. We have a 2.5 risk reward ratio. If we took 100 trades like this with a 50% win rate, because that is the win rate that you'll get flipping a coin. You flip a coin, you'll get a 50% win rate. If you have a win rate that's less than 50%, you're doing something very wrong. Because I could flip a coin, it's telling me to buy or sell, and have a 50% win rate. If I took 100 trades with this risk reward ratio, I would be rich. Why? Because every time I lost, which would be 50% of the time, I'd lose 1R. But every time I won, which would be the other 50% of times, I'd make 2.5R. So, on average, I'd make 1.5R every 2 trades. And stack that up against a long amount of time, 100 trades, I will be rich. So there's no need to go into the 1 minute, 0.5 micro nanosecond time frame to spot these sniper entries. You just need to have a bias where you think price is going to go, and you just need to manage risk. That is all. Make your winners a little bit bigger than your losers. Choose a suitable time frame, like the 1 hour, that holds some weight. I use it because usually price follows where I think it's going to go. Because support and resistance areas in the 1 hour work a lot better than the ones in the 1 minute and the 3 minute and the 5 minute. What you can do is you can just start your analysis from the 1 hour, draw your zones like I have here, drop down to these lower time frames, and get your entries like so. Enter like we have, but substitute the daily for the 1 hour and the 1 hour for the 5 minute. You can scalp like this. But I like swing trading because I have school and I can't be on the charts all the time because my teachers will not be very happy with me. So if I choose a higher time frame, I can hold my trades during lessons, and my trades will be held for longer, which means when I can look at my charts, which is most time during lessons because my teachers hate me, I can focus and analyze a chart, and I don't have to be stressing there during maths trying to solve the Pythagorean theorem and have a trade open that's risking thousands of pounds. Please do not overcomplicate your trading. You don't need 15 different multi-time frame analysis, order block, fair value gaps, smart money concept, manipulated oak, birch tree, Minecraft dirt block. No, it's not necessary. You don't need to be getting a 90% win rate, trades 200 risk to reward ratio, flipping 1000% of an account at once. It is pointless. Just make your winners bigger than your losers and have a 50% win rate, which is a win rate you get from flipping a coin, and that is all you need to be a profitable trader. So I hope you guys have learned a lot. My Discord is in the link below, where I post all of my trades, and every Sunday you get weekly analysis on where my major pairs and indices are going to go. My opinion, you can follow them or you don't have to. I'm not a financial advisor. I'm a kid. I'm a kid who makes money. That is my opinion. Simple as that. Link to the Discord will be in the description. But other than that, have a nice day, and I'll see you guys in the next video. Peace.